Thanks for tuning into Stocks with Antonio. Can you believe it's still cold? I got my jacket on inside the house, and I can't wait till we get warmer weather. And my plants can't wait either because they are not doing well. So hopefully they make it because some of my plants are not looking too great. But let's go ahead and get into stocks. That's what you're here for. What a day today. I expected today's just to be a complete red day, and we got a little bit of a recovery with some of the stocks. So that was a bright side. And I was able to be in front of the computer all day. So I was just watching the stock market. Usually that's not the case. I don't really get those opportunities. But today, Monday, I was just home looking at my portfolio and I made some decisions. I had to make some decisions today. So it's important if you in my eyes that if you have a portfolio and you're trading, sometimes you have to make the tough decision and let sometimes a stock go because you want to protect your capital. And sometimes you can take that money, put into something else, make up that loss plus a gain, right? And that's basically what I did today. I decided to exit out of Lyft for my short-term portfolio. Now, I'm not saying that Lyft is a bad stock, okay? I think Lyft has a lot of potential. Their earnings are coming out soon in February. I think maybe February 10th. So they're coming out soon. And it did start to recover a little bit today. So I'm not saying if you have Lyft to sell it that it's a bad company. No, I'm not saying that. I'm just saying for my portfolio, it wasn't doing what I wanted, right? And when I buy a stock, I have a goal for it. So if you've been watching some of my videos, you know I have a long term. In my long term, I got the Mag 7 in there. I got an ETF that tracks the S&P 500. I even got a mutual fund. I got some other stocks in there. And I've been holding those for a very long time. So I'm a big believer in long-term investing because I see how your money can grow over time, especially if you're invested in good companies and you have a good diversified portfolio. So I got a diversified long-term portfolio, and my goal is to continue to add money into it every month and increase my share counts in companies that I believe are going to be worth a lot more down the road than what they are today. So that portfolio, I don't really check as much. I just focus on putting money into it. But my short term, I do look at it a lot because I'm constantly changing things around in there. So I let Lyft go at a small loss. It wasn't a big loss, but I decided, hey, this money I could put it somewhere else where I can make up that small loss plus a gain. And that's what I decided to do. Now, the stocks that I bought today, I bought three. Okay. First one, Applied Digital. If you've been watching the channel, you know I love Applied Digital. And I saw it in the morning, it was going down. And I said, this thing, and I was just watching it. And I could see that, hey, this thing is about to turn around. And that's what happened. Right when I thought it was about to turn around, I got in. As soon and believe it or not, I got in and I was in the green in the same day. So what I went ahead and did to protect my capital, I put in my stop loss. Now, to me, Applied Digital, the support level that I have for is $30. If it breaks under that, I believe it's going to 25, and it can. So that's why immediately I put in my stop loss, especially after I just sold Lyft at a small loss, took some of that money, put it into Applied Digital. I said, hey, if I'm in the green today, I'm going to put a stop loss because right now, a big reason I believe we're having such a sell-off in the market is uncertainty. Okay, investors don't like that. And when there's uncertainty in the market, the stocks sell off. And that's what we've been seeing. And we got news coming out all the time. It's midterms. We have a lot going on this year. We're getting a new Fed chair. So with all the news coming out, you really want to be protecting, if you're doing short-term, your capital. Okay, so hopefully you're doing that. And then the other one I got into is APLX, the 2X of Applied Digital. So APLX I got into. Now, APLX or any 2X of any stock that if you decide to get into a 2X of a stock that you follow or that you have, make sure you're not holding those long term. Okay, do your research on them. They're not meant to be held long term. Okay, so my goal for that one, I didn't get out of it today. I got in at 83. This thing went over 96. I know some of you are watching. Hey, why didn't you get out of it? I should have, but I decided to hold longer. But hey, being greedy can cost you because it went up 96 and it closed down in the low 90s, 91, I believe. I'm not looking at it right now, but I know it went down to like 90, 91, 92 range. Now I'm planning to sell it off tomorrow because remember, that's not really something that's meant to be held long term. So I just like to put that out there. Definitely do your research if you decide to get into a 2X because they are risky plays and they move. They definitely move. They can get away from you. And then the other one, listen what I was able to do with this one. I've done this before, but I was watching IREN, right? I was on the computer and I saw, wow, this thing is dropping. As it was dropping hard this morning, and I saw it getting really near my entry point. So what I decided to do, I said, hey, I can let myself go in the red on this, or I could sell at a small profit. So I had to act quick. I sold it at a small profit, and I re-entered at a lower purchase price, and I got a little bit more shares. Now, I have to make a decision because February 5th is coming up. And February 5th is an important day if you're holding IREN because that's when their earnings come out. Now, what I've been noticing, and not just this year, this happened last year and it's happened before then. Companies sometimes come out with good earnings, okay, and they still sell off. So IREN could come out with good earnings and sell off. That's why sometimes I don't like to hold through earnings. I usually sell right before earnings because it could go either way. But I do believe that it is going to have good earnings, and I believe it could potentially break out, meaning go above $60. Not too long ago, this thing already broke the $60. I know it's high. I think it went above what is. Let me check the high because let me check really quick. So IREN stock. Let me check. So it's 52-week high, $76. I believe if it has great earnings, this potentially could break the $60, maybe even reach a new high and then come down. So if it skyrockets, I believe it will eventually come down. So maybe after earnings, maybe for a couple days or a week, it'll skyrocket and then it'll start to come back down. Right, so that's just something to keep in mind. That's what I will do if I hold through earnings and this thing just jumps in price big time, which is if I hold it, that's what I'm hoping it does. I'm going to sell out of it, and then I'll re-enter at a lower price later on because I'm playing this in my short-term position. That's what I do in my short term. I'm looking to grow my money there as quickly as possible. And sometimes what I do when I make good profits on a short trade, I'll take some of that money and I'll invest some of it into my long term to keep growing my long term because hey, I don't want to always have to work for someone else, right? So I want to build wealth, and so one day, hey, I can retire. I don't always have to don't want to always have to worry about working a 9 to 5 and things like that. So I take investing seriously, but this is what I did today. Now remember, this is not a suggestion for you to do any of this. I'm not suggesting because I'm not a financial advisor. I cannot tell you what to buy, hold, or sell. I'm just sharing my experiences with you, and hopefully you find it entertaining. Hopefully you find it educational. But I am using my stop loss. I've had people tell me that they don't like stop losses. And, you don't have to use them. And the reason they tell me they don't like it because they say, hey, it's not foolproof. I know it's not foolproof, but in my opinion, it's better than nothing. And that's where I use it. I'm always going to talk about protecting your capital, especially on short-term trades. When you're investing short-term, you need to look into the stocks that you're buying and have a plan. Why are you buying that stock? And what is your goal? Are you buying this stock because you plan to hold it for the next 10 years and you plan to build a lot of wealth with it? Or are you buying this stock because when it goes up $1 or $2 a share, you're going to sell out of it, take that money and put it into something else, right? What is your purpose with that stock that you bought? And that's was my purpose with Lyft. I think it's a great company. I think it has potential, but it was just for short term for me, and it wasn't moving in the direction I wanted. It's been going down. It did start to move up a little bit, so I decided, hey, let me get out of it, recuperate some of my loss because today actually it started to go up, right? But I decided to sell it still at a loss and put it into something else. I'm a believer in AI. I believe in data centers are the net, or I think everything AI is part of the future. So data centers, I think they're going to continue to grow. I think these companies, their share prices are going to continue to go up. I believe they're going to continue to open up new locations. They're going to continue to get new contracts. Their revenue is going to continue to increase. So I believe, hey, Applied Digital is going to go back up to $40. It's going to go higher. So it's not bad to even having your long-term portfolio. Believe it or not, in 2025, I had over 600 shares of Applied Digital under $10 a share, but I was shorting it at that time, and I sold all that when it hit about 16. I did put some Applied Digital in my long term, but it's not under $10 a share. It's over it's under $20 a share, but it's over 15. I don't remember exactly right now because I'm not looking at my portfolio, but imagine if I would have just kept increasing it, how much profit I could have made. But hey, that happens. Sometimes you sell and the stock runs up. I have some stories where I bought some stocks in 2025 that are double well now that what I got it at. One of that is Palantir. So I'm a big believer that you can make money in stocks, long term, short term, but you got to pay attention. You got to be checking your, what you're holding. You got to understand why did you buy it. Have a plan. Make sure you're putting your stop loss if you buy a stock and it's not going in the direction you want before it goes. Because sometimes what people do, they say, "Oh, it'll come up," and it doesn't come back up, and they become bag hoarders. And some of the company may never get back to their purchase price before it runs down too low. I rather try, get the majority of the capital out of there so I can put it into something else and grow it. So that's why you got to stay on top of um, your stocks, and you got to look for opportunity. You got to look for companies that are hot right now. Anything in AI or the majority of AI is hot right now. Data centers are hot. Why do I like Applied Digital? Hey, it had good earnings. They continue to grow. They're opening up locations. They got a big contract with CoreWeave. Those are the things you want to see. There's companies out there that got no revenue. They're not having good earnings, and people are investing in them. You want to stay away from companies that have bad earnings, that their revenue is not growing, that the CEO is not giving good forward guidance. You want to, if you're going to take a risk, in my eyes, you want to take a risk in something that, hey, Applied Digital is definitely growing, right? IREN, it's growing. Look at the revenue. They just got a huge deal back in November from Microsoft. I forgot, right? It's worth billions of dollars. I forgot the exact number, but that's what you want to be paying attention. You want to see that the companies that you're putting your money into, are they companies that are actually bringing in money? Are they companies that are actually growing? Or otherwise, what are you investing in? I have friends and people that I work with that they'll just buy any company and you do a little bit of basic research. And you're like, hey, that company that you're investing in, it has bad earnings. Analysts are saying it's a sell. It has nothing really going for it. Why are you buying it? Sometimes it's just they saw a short and they're like, yeah, someone recommended that it's going to be the next big thing. I don't take that big of risk. I like to invest in companies that they got good earnings, they're growing the revenue, CEOs giving good forward guidance, that I see them growing in the future, that I see them being around long term. And that's what I do. And I believe that APLD is that company. I believe APLD will go back up to $40. I believe IREN has a potential to go higher. I believe these companies are going to stay around. That's why I invest in them. And that's why I feel confident short term I can make money off of them because they got a lot going for themselves and they're in a segment that's hot right now. And that's what I look for. What's hot? Also, some other stocks that are hot, right? Rare earth, robotics. You want to look for markets that are hot, companies in those segments that are growing, that are doing well. And those, in my eyes, are the ones that I look for every day to keep on my radar. And some days I don't even invest. You don't have to invest every day in the market if you're short-term trading. Some people think that. Sometimes I sit out. Sometimes I don't invest, right? But I'm always watching the market. I'm always looking to learn. And if you're watching this channel and you made it this far and you're like, man, I wish I want to learn more about stocks, I want to see about charts, then I recommend that you check Average Joe Day Trader. Check out his channel. He's more of a chart guy. He goes over the charts. He has an amazing Discord. Will he even chart for you? He's a really good guy. And if you haven't checked out his channel, please do me a favor. Go ahead, check his out because he brings a lot to his channel that could give you a lot of education when it comes to stock. But I really do appreciate you watching. If you haven't done so, please consider smashing the like button. Please consider subscribing to the channel. Thanks for watching, and I'll see you on the next one.